Welcome back in. It's time for Money Tuesday. And how is your 401k doing? Have you checked it lately? And have you checked the markets? And the big concern is a correction coming. Marshall Clay with the Welsh Group joins us to talk more about that. Hopefully give us some insight. Also the former #1 tennis player at West Point, but that's another story. Meanwhile, speaking of lobbying back and forth, we've had, in the last few years, we've seen a lot of that with the markets.
Yeah, and I think the hardest thing for retail investors to navigate is the psychological ups and downs of the capital markets. And as you mentioned, in 2022, the market was down 18.5%. We rebounded a little bit in 2023, up over 26%. And so far in 2024, we're having another solid year. We're up 7-8% so far in 2024. The crazy thing about the markets is over the last 5 or 6 months, we're about 25 to 26% off those lows that we experienced in October 2023. And so what I want our viewers to understand is that when the market moves that far, that fast, corrections are a healthy mechanism within the market to actually, allow for further upside growth. So don't be surprised or shocked if we see some sort of 5 to 10% correction over the next 3 to 6 months. There's no guarantee that this is going to happen, but just statistically, when you look at how far markets move in this short period of time, it's likely that these types of things are going to happen.
And yeah, they are inevitable. And the market, what it's doing right now, people will hear this term overheating right now. I mean, so it's eventually going to happen. But what do people need to do to protect themselves from maybe a huge loss?
Right. So the first thing is look, to understand that these 5 to 10% corrections happen often. They happen on average about every 18 months. We had one in 2023. We had one in 2022. We're likely going to have one again. But there's a big difference between panicking and going all in, going all out of the market, going all cash, as opposed to just managing risk, just taking small chips off the table. And certainly if you're a younger person, you have a long enough timeline, the risk to your portfolio isn't as great. But certainly if you're a retiree, at this point, I probably would certainly look at the portfolio, make sure that you have enough cash to facilitate your cash flow need for maybe the next 6 to 12 months. But the key is to not make the big bets. I have talked to way too many people that say, oh, I'm going to all cash right now. Or on the flip side, hey, now's the time to go all in on the stock market. Those are the types of decisions that can really get you in trouble, particularly if you're close to retirement, can really cause you to have to change or make a change in lifestyle.
All right, we only got a few seconds left. There may be some people out there, and you hear these commercials all the time, well, buy gold. Is that a safe thing to do, just to really guard yourself at all? Well, you have the money to do it?
Well, I think, we as a firm, my firm, we don't necessarily invest in gold on behalf of clients, but I think a lot of people view it as an additional diversifier. It's a different asset class from bonds or stocks. It's been around for a long period of time, and certainly, there's a lot of commercials on it, but, just know if somebody's selling you something like that, they're selling it to you for a reason. They're likely making a profit in some way, shape, or form. Certainly, if you're selling physical gold, there's going to be commissions and fees associated with that, but I would just tell anytime somebody's investing in something like that, just do your due diligence.
All right, Marshall Clay with the Welsh Group, we do appreciate it. Thank you so much.